Federal Reserve Chair Janet Yellen announcing what's being called the great unwinding of the central bank's $4.5 trillion bond portfolio that the Fed bought to prop up the economy after the crisis. The Fed also keeping a potential December interest rate hike on the table. Joining us to talk about how this could affect your money is Jonathan Hoenig, managing member of the Capitalist Pig. Good morning.
Great to be with you, Lauren.
You know, I don't understand the market reaction yesterday. Why investors are so unconcerned. I was reading a Deutsche Bank report, and they say that this unwind is a potential catalyst for the next financial crisis, but the Dow hits a record high.
It is tremendous. I mean, you said it yourself. This is the great unwind. This is a policy that's been in place for the better part of a decade. 9 years, as you said, $4.5 trillion. And Lauren, we really are in uncharted territory here. The market hit another all-time high yesterday. That's a good sign, but really no one knows what the outcome of this decade-long experiment from the Federal Reserve has been. Again, there's no precedent for this in modern American history. So we're starting to see interest rates tick up. We're continuing to see stock prices go up, but there's still tremendous wild cards as the Fed tries to undo this massive ball of wires that it's taken nearly a decade putting together.
Did it work? Did their decision to buy up these trillions of dollars in bonds, did it work? Did it prop up the economy? We know it propped up the market.
Well, you know, I agree with what our correspondent asked Janet Yellen a couple of minutes ago, at least from yesterday's conference, that it certainly worked in propping up the stock market, almost a perfect correlation between the Fed's intervention in the market and the higher the stock market has gone. I think the fear is though we've become almost addicted to that easy money policy. And yesterday, when the Fed essentially alluded to the fact that they didn't really understand where inflation was, I think that's the big wild card right now, is that we know that the market's gone up, but we don't know the status of inflation. And although stocks continue to do well, about 3 times as many new highs yesterday as new lows, the long-term effect, and this is going to be years in the making, is still unknown and still has a lot of question marks and a lot of fears and concerns.
As of now, the Fed says we'll see another rate hike, the 3rd of 2017 in December, and then another 3 in 2018. Your thoughts on that timeline?
Well, you remember when they said that they were going to start increasing rates when unemployment, I think, dipped below 6%? So you know, there's really no rhyme and reason. It's trying to, you really have a better time figuring out how many Huggies that Walmart is going to sell next quarter as against what the Federal Reserve is going to do. They even said they're data dependent. So you really got to keep an eye on the market, not so much the Fed. And if you look what's doing well right now, banks, for example, like Citigroup, 52-week high yesterday. So what we're starting to see in the market is a change of leadership. A lot of those stocks that do well with higher interest rates, like banks, like financials, they're picking up for where technology fell off.
Yeah, and we did see the NASDAQ, the one market not in record territory. It fell just a bit yesterday. I'm still, shocked by the market reaction to what is considered the final exam in the Fed's response to the crisis, how they unwind their portfolio. It boggles my mind.
It's not the final. It seems like the final, but it's not the final just yet. Keep in mind, it took us 9 years to get into this issue. It's going to take us at the minimum 4-8 years to get out. So I think as the old saying, the old economics saying goes, there's no such thing as a free lunch. And I think the long-term effects of this intervention still have yet to be seen. Whether it means a stock market collapse or a continued stock market rally, we simply don't know. Again, this is uncharted territory for the modern economic system.
Well put. Good to see you, Jonathan. Thank you.
Thanks, Lauren. Be well.